Hello, everyone, guys and girls from any part of the world you are listening and watching this. This is the Forex Beginners course, and I'm so excited to get into this because I'm a very big fan of mastering the basics because the basics is what you are going to build every other thing on. Without a very good and solid foundation, whatever you are building is going to crumble. So, with this course, I assure you that you are going to have a very good foundation of Forex. And this is also not for Forex beginners only. It is also for mid-level traders and pro traders because in this course I'm going to be talking about some misconceptions about Forex too, and I'm going to be demystifying them. So let's get into it. So what do you intend to learn in this course? At the end of this course, you should know what Forex is. I'll be telling you the definition of Forex and I'll break it down to you in the simplest way. Also, basic terms we use in Forex. You are going to know the basic terms we use in Forex because in this game there are some languages that you are going to be hearing and you need to understand them. Then pips calculation. Pips calculation is very, very important in Forex because pips is what is like the language of Forex. Is like one of the most basic things you need to know in Forex. Also, analysis, fundamental and technical part of it, which are both very, very important and they work hand in hand. I'm going to be explaining those two. Then basic technical analysis. At the end of this course, you should be able to do technical analysis yourself and be okay with it. So the next one is how to use TradingView and MT4. As a Forex trader, you should be able to use those tools. So at the end of this course, you are going to be able to use those two, TradingView and MT4. Also, the concept of risk management. Risk management is what keeps you in the game for long. It is the closest thing to the holy grail because in this industry there is no holy grail. But with risk management, it tips the scale in your favor. So I'm going to be telling you the concept of risk management too and how you can apply them. So let's get started. What is Forex? Forex is the short form for foreign exchange. That is the simplest definition of Forex. It is the exchange of the currency of one country for another at a particular exchange rate. For wherever you are listening to this, I'm sure you have a currency there. Let's use the US dollar and Nigerian naira as an example. Let's say the US dollar, one US dollar is 300 Nigerian naira. That's $1 to 300 naira. So let's say you wait for a little bit, maybe for another government to take power, and then the exchange rate increases from 300 naira to $500. It means now, if you want to exchange that 300 naira if you want to exchange that $1 for Nigerian naira, you are going to be getting 500 Nigerian naira instead of 300 Nigerian naira that you bought it with before. That is simply Forex, the exchange of the currency of one particular country to another at a particular exchange rate. But then, what I'm about to explain to you is more than that. It's not just as simple as that. It is simple, but not as simple as I just explained it. So, what is traded on Forex? In the Forex market, we trade the following futures, currencies such as US dollar, GBP, Euro, Japanese yen, Australian dollar, New Zealand dollar, Canadian dollar, Swiss franc, indices such as DAX, S&P, DJI, Nasdaq, VIX, and then cryptos. I'm sure almost everyone knows this already. BTC, ETH, BNB, Tron, XRP, etc. Then in the forex industry also we trade shares, we also trade metals, commodity, bonds, CFDs, energy. We are going to be I'm going to be explaining a lot of these too and you're going to get them. But let me show you an example of some. Okay, these are example of indices. We have XPS, SPX here. we have NDX, we have DGI, we have VIX, and we have DXY. These are some of the examples of indices you can trade on Forex. And also, these are some example of currency pairs that you can trade, such as Euro USD, GBP USD, USD, and Japanese yen. So these are some of the examples of currency pairs you can trade on the Forex market. We also have the crypto section, which is BTC. This is another BTC from another broker. Then this is Ethereum and USD that you can trade in the Forex market. We have a lot of examples also, such as Tron, XRP, as I've said before. So let's continue. So what we actually do is that we do daily transactions on the previously listed items. With time, you get to understand each of them properly. So the pairs I showed you previously, such as let's say currency pairs like USD JPY, what we do in the Forex market is that we trade them daily. So let's continue. Forex broker. Forex brokers are firms, not a human, that gives you access to the Forex market. They provide you as a trader access to the financial market by allowing you able to access a trading account. They give traders what we call leverage. You see, before the advent of Forex brokers, like I've explained it here, um you can't trade the Forex market if you are not part of a big association such as men of the Wall Street. So these people have very large capital that they trade with. But to make people trade the forex market at a retail level, then brokers have to come in. These brokers are the ones that give you access to the market with even your small capital or large capital or whatever capital you have, they give you access to this market without having to have a huge amount of money. So you are going to be understanding what they do deeply as we go on in this course. So below are various brokers in the forex market. We have Forex, we have Forex, we have FXTM, we have FXCM, we have FBS, Light Forex, XNES, and OptaFX. So these are some of the forex brokers that we have that allow us access to the forex market. And recently also there are some there are some that we call proprietary firms. They give you a large capital for your small money. Then you they give you an evaluation phase. Once you pass it, they will give you a large capital. So these are also some form of forex brokers that give you access to the forex market. So forex session. What are forex session? Forex session is just a particular time that you can trade the forex market in a particular region. Sydney session. This is the session that represents Australia and other countries around that time zone or region. So the Sydney session opens around 10 p.m. to 7 a.m. GMT. So that is when the Sydney session opens. So we have the Tokyo session too. This session is sometimes called the Asian session. It represents Japan and some other Asian countries. So the Tokyo session opens around 12 a.m. to 9 a.m. GMT. So the London session, this session represents the United Kingdom and the countries around it, and also the countries that uses the time zone around the London session. So it opens around 8 a.m. to 5 p.m. GMT. That is when the London session opens. We also have the Frankfurt session. This session is in Germany and represents the Europe and region around Germany. So this session opens from 7 a.m. to 4 p.m. GMT. Then we have the New York session. This session represents the United States of America, and the session opens between 1 p.m. to 10 p.m. GMT. That is when the New York session opens. So you should note the forex is a 24-hour market but doesn't open on weekend except for some markets like crypto market etc, and each session is only open for 9 hours. So all these sessions that I listed before, such as Frankfurt session, Asian session, London session, New York session, they only open for 9 hours. So after 9 hours, that particular session closes. And then, but before it closes, another session is already open. So you don't have to worry about the market closing finally. But once it is Friday and all sessions are closed, then that is it. You can't trade again until Monday, except for some markets like the crypto. The crypto market, you can trade it on weekend. This also depends on your broker. You know, I already explained before that the brokers give you access to the forex market. So there are some brokers that will allow you to trade crypto during the weekend too. So that means you can trade crypto from Monday to the next Monday, 24/7. But there's also some brokers that won't allow you trade in the weekend, but mostly you'll be able to trade crypto in the weekend, and some markets too that is not crypto. But the forex markets for mostly currency pairs, they only open from Monday to Friday. So after all the sessions are closed, then you'll be able to trade them again only on Monday or Sunday night, because I think Sydney session opens 10 p.m. to 7 a.m. So once it is Sydney session on, it will open. So types of forex traders. We have various types of forex traders. We have scalpers. They only stay in a trade for a few minutes before closing or taking profit. This type of traders, they are not interested in holding a trade for a long time. So once they enter a trade, they only they only stay in the trade for a few minutes before their take profit hits, or before they close the trade themselves manually. So this type of traders are what we call scalpers. Then we have day traders. This type of traders can hold on to a trade for hours, but mostly they close before the market closes for the day and rarely hold it overnight. Day traders, this type of traders, they can hold a trade longer than scalpers. You know, scalpers they only hold for few minutes and then get out of the trade. But for day traders, they can hold a trade for longer than that, but they don't hold it overnight. If they open a trade on a particular day, they also close the trade on that day, but they don't hold it till the next day. So those are day traders for you. They can hold for hours though. Let's go to the next one. The next one are swing traders. Swing traders, they can hold a trade for days, even weeks. Their intention is to always catch a long-term price movement. With swing traders, they hold a trade for a longer time than day traders. They can hold it overnight. They can hold it for days, maybe 4, 5, 6 days, and even weeks sometimes, maybe 3, 4, 5, 6 weeks. So these are swing traders, and their intention is to always catch long-term price movements. So when price is at a particular level, maybe on a higher time frame, which I'll explain to you later. So they try to catch it and then let it move far away in their particular desired direction. So those are swing traders. The next type is position traders. This type of traders, they can hold trades for months and even years. Just like swing traders, their intention is to catch long-term price movements. You see, position traders, they hold, as I've explained, they hold trade for months. So this is longer than a swing trader would hold trade for. Some people will tell you that swing traders also hold trades for months, which is very true. But position traders, they hold trades for longer than swing traders. So they can hold for months and sometimes even years. So these are position traders. And just like swing traders, their intention is also to catch a price movement in the long term. So these are the type of traders we have. To recap, we have scalpers that only hold trade for minutes. We have day traders that only hold trades in within a day. Then we have swing traders that hold trade for a long time, days or weeks. And then we have position traders that hold trade for months and even years. So these are the type of traders we have. So this comes to the end of section one. I'll go to the next section, which is basic terms in Forex. So thank you.